Welcome back to another episode of Fast Casual Nation. And as you guys know, this is the show that breaks down all things fast casual, from business to brands to leaders. And today we're doing a brand analysis. This is a new series that we've kind of put together here. And really the concept behind this is to really go in deep on a particular brand that potentially is either performing, over-indexing in the fast casual space, or someone that could affect the fast casual restaurant space in a big way. My name is Paul Barron, and I'm going to be your host today. And as I said, we kind of break down these in and out. I mean, in between our interviews with some of our leading executives or some of our topics, we try to come back and do these brand analysis for you. They've been very popular with you guys, and I do appreciate the Twitter world out there giving us some kudos on that. So, but before I get started, I want to kind of mention to you our Fast Casual Global event, which is an event that is happening actually this month, now that it's February. Just go to virtual.foodable.io. You'll be able to register for this event, and it's free, and it will have some of the top restaurant brands in the world organized and speaking there throughout the sessions. I think we have 7 sessions, so definitely get in over there. If you have not had a chance to go to fastcasualglobal.com, that is where essentially we've kind of created a group, a power group of operators and team members of the industry that are kind of focused in on this space, and it's really a great place for you guys to kind of come together. And that's, again, fastcasualglobal.com. All right, so my breakout of today's brand analysis is on PepsiCo. And for those of you who maybe don't, you look at what we're doing here on Fast Casual and why Pepsi. And with Pepsi's most recent move in their acquisition, but their partnership with Beyond Meat, it starts to put some very interesting chess pieces in play for the fast casual sector. What I'm going to show you here is some of the wins and losses potentially for Pepsi and how it could affect the fast casual space. So where I broke this down in terms of wins and losses, one of course, in the win side is big advancements in global well-being. And this is both from a personal standpoint as well as business and environment standpoint. They are very aggressive also on their digital approach toward the food service category, but also towards consumers when it comes to kind of just spreading the word. Strategic partnerships, I think, is a big factor in this one, and then also their thought leadership of how they're putting together some of their advancements of where they stand in the industry. It's a really good strategy. Where I think they have some challenges is they should be moving fast on reduced sugar trends. They did have this as an initiative in 2018, but did not necessarily move heavily on that over the past couple of years. And I think they could move faster, and I think that will help them in a big way. More insights to helping food service. This is another factor. I think a lot of companies like Pepsi, some of the bigger players in the industry, they're trying to catch up with where the industry is today. And there's a lot of strategic moves that have to happen. But the big one is being able to educate and get basically ideas and innovations out in front of the restaurant operators so they can kind of make it past this downturn in the cycle of our business world that's kind of been propelled upon us. The other thing is they need to prepare for micro brands. And micro brands are really starting to shake up the industry, not only from a standpoint of great positioning, but they're also aligned very well with consumers today. And I'll talk a lot about that and why Pepsi could be a big player in this. And the other thing is they need a hard U-turn on healthy snacks. This is a tough one because this is really where Pepsi has grown their business. PepsiCo, I should say, has grown their business. And in food service, the snacks also play a role in the game. And I think there's an opportunity here for Pepsi if they really go after. And I think the big move of partnering with Beyond Meat is probably setting them in the right position. Let's talk a little bit about how consumers how this connects to fast casual and why consumers are really important here. One is that the fast casual consumers are very like-minded consumers that are really seeking out this good for you and good for environment movement. They're probably the one category in the restaurant industry that is leaning that way in a very, very big trend. The other thing is these consumers are wanting a story. And it's often very difficult for major conglomerates or major concept brands like a PepsiCo to really tell a story that engages with consumer. They have great stories, but it's a different thing when consumers in most cases are looking for these almost like these homegrown or mom and pop kind of components. Now, Pepsi is making some strategic moves in terms of acquisitions to help kind of go in that direction. I mean, even if you look back at their Stubborn Soda movement, which is a new micro brand within Pepsi, little different style, definitely has that attachability to a consumer. The other thing is they're looking for innovation in company vision. And I think that in being consumers, they're looking for companies that are really showing innovative moves because consumers today are a lot more forward thinking and a lot smarter in terms of how they're researching brands. I mean, you could just drop into what's happening in mainstream stock analysts right now with where the average 20 to 35 somethings are moving and how they're starting to acquire information and how they can move markets very quickly. If you haven't had a chance to check out, our GameStop video analysis, make sure and do. I'll leave a link in the description. The other thing is, and here's some data points that are very, very important, and these align very quickly with a brand who, if it's positioned well, can really make a stand in the fast casual sector. 61.2% of top 100 fast casual consumers align with the PepsiCo mission, meaning that they're really going after kind of people, planet type approaches, and that's where these consumers are aligned. They want companies that are doing good for the environment, for people, and for business, especially in supporting underserved business entrepreneurs and so forth. 70.3% are seeking plant-based alternatives and lifestyle shifts. So that obviously aligns with where PepsiCo is trying to set up a partnership with Beyond Meat in their plant-based snacks strategy, which I think is, it's probably a little late to the game, but I think they could break out and really kind of start to really align well with more fast casual consumers. The other one is 63.2% look for companies with people and planet missions. As I said, it's really a new era of fast casual consumer. We're starting to see kind of a passing of the baton or so. We kind of knew it's already had been in place for about the last 5 years, but it was a coming thing in terms of where the major expenditures were coming from in terms of demographic. Demographics now in fast casual are heavily spending from the ages of about 26 to 38 years old. And when you look at that category, this is in the sweet spot of what consumers are looking for in terms of brands that are doing good for our world, but also doing good to help the local communities. And that, I think, is where PepsiCo could align in a very interesting way with what's happening in fast casual. If you look at some of the data, and we pulled some consumer sentiment data here, if you look at their brand sentiment versus their top 3 competitors, and I'll talk about who those are. Pepsi, of course, is the blue chart line, and their top 3 competitors, the red chart line. You'll notice here that they've had a little bit of a consumer sentiment competitive move over the past few months. And this has really kind of been a positioning, I think, of their global initiative and what they're trying to do to kind of put out this message that they are a company that's really kind of shifting their thinking. This could happen, and we see it in the automotive industry. If you look at someone like GM, that's really kind of going the EV route and their most recent statements. We see it in companies, obviously innovative companies like Tesla, but obviously if you compare someone like a GM to a Pepsi, those are good alignments in terms of old line companies that are changing the way they're thinking. And I think it's starting to show up in the consumer sentiment towards these companies. And this will be interesting to watch because the consumers are very smart, so if you are greenwashing or are sustainable washing or on good for you washing, eventually you're going to get caught. And I think that Pepsi is real in their efforts of what they're trying to do from a global position and really as a brand leader that could really impact the industry. The next chart you're going to see here is brand loyalty. Now, this is another one that's tough. This is a very hard and difficult thing for big brands like Pepsi to move the needle on, because there's so many brands that are coming into the market. And when I say coming into the market, a lot of these craft brands, these are just a few. I compared against their top 3 competitors, and then also some micro brands. Weren't necessarily their top 3, but my top 3 that I were looking at alignments of analyzing consumer crossover and the brands and what they were doing. But if you look at these, brand loyalty, tough to maintain because there's so much choice. So they're kind of up and down, but they're holding their own in terms of comparison to their big competitors, which is Coca-Cola, Starbucks, and Nestle. And I think that is indicative of the fact that the brand is not losing customers, which is a big concern. But at the same time, I think they have an opportunity here to really start to break out. And this might be the strategy that Pepsi is on in terms of these strategic alliances that they're putting together. If you look at the micro brands with Simple Soda, Boylan, Euphonic, or Forks, Ken, we've actually had it here in the studio. We did a demo with our CEO. Interesting product. Boylan, a very unique and artisanal soda brand, and then Simple Soda, kind of a breakout soda brand out of Arizona. These companies are really aligned well with brand loyalty, and I think this is something that the bigger concept brands like PepsiCo aspire to kind of get to that level. Now, can they reach that level of loyalty? That one's tough. That one I think has to take a different kind of track with a lot of these brands, and they've been doing it, and I'll explain how that works and why I think there's a partnership here with Beyond Meat and where that partnership might go. Further into brand connection, which is consumers that says, wait a minute, I know who this brand is, I connect with them because they're doing some good for the environment. Pepsi, of course, started out kind of in a soft position and have inched their way up into a pretty decent position at 64.2 on our up to 100 scale. Now, you compare that to micro brands. Micro brands are obviously, they have these deep stories in many cases, connect with consumers in a very, heartfelt way in many cases. And the micro brands are holding on very strong, and they're also growing right now because we are seeing a lot of people, and this goes back to loyalty, a lot of people who are starting to use micro brands as an alternative. And this is everything. You can imagine that's why the specialty food market is exploding so heavily, which has a big play here. We'll talk about that in another video of why specialty food could be a huge factor in fast casual. The things that I looked at when analyzing Pepsi, I wanted to see where their fundamentals were, and went across Pepsi's site, really looked at what was being done in the media, and I kind of dug a little deeper to look at a report and performance metric that they did in 2019. And in 2019, they put together what I thought is, it's basically a framework of what they're trying to do from a sustainability standpoint, kind of a mission to reformat how the planet is working. And these are the kind of companies that can make major moves if the right executive team is on board. And I think they have an amazing executive team in place now that can help this actually happen. And this being 2019, now we're moving into 2020. If you look at their agriculture moves and their packaging moves, these two categories right here, from 2016 up to where we saw this in 2019, the question was, did they make their 2020 target in terms of achieving sustainably sourced potato and whole corn, oats, and oranges by 2020? That, I think, they're close on. The other things that was huge is sustainably sourced sugar, which they were at 86% in 2019, so most likely that's been hit. But I think they're really gonna need to move toward going toward as much sugar reduction as they can because of the alignment with this new crop of consumers that are really getting in today's market. Packaging, they were pretty active in 2017, didn't move the needle much in 18 and or 19, but 2025 is a target that's a little further out there. I think they could be doing some more things in terms of packaging and kind of helping the environment, and there's some opportunities for that, especially now with the amount of packaging required to deal with the restaurant industry and food service. It has exploded dramatically. I do hope that Pepsi has put this on the front burner because it will have a huge effect. The amount of waste that we're putting into our landfills now due to takeout and delivery is massive when you think about how many millions of meals are served hourly in the United States through takeout and delivery. A big section that I think we need to take a hard look at, and if Pepsi is on the right track in terms of packaging. Water is one of those things I think that is a good scenario that you've got to be kind of looking at it from a standpoint. This is an area, again, that I think Pepsi could probably improve on. Most likely, again, they have probably reassessed their whole position of where this is going, and I do think that's going to be an interesting thing. My next one is on climate. This is going to have to advance dramatically if they're going to stay in tune with today's consumer. This is probably the Achilles heel of all major companies in the food service space if they are not advancing their climate position in a much more aggressive way. And I think this is going to pay off for those who really kind of make it a priority. And I'm not talking about a 2030 priority. This should really be a 2025, 26 priority, that because those are the kind of companies that we're going to be positioning. Otherwise, it leaves these massive gaping market holes of all these direct-to-consumer brands that are being developed right now from all this work from home, massive consumer and consumption audience. You don't have the benefit, because Pepsi, if you think of all brands, Coca-Cola, Pepsi, Starbucks, Nestle, any of the major beverage brands, if you look at the opportunity they had to get in front of consumers' face on a day-in, day-out basis in all of these fast casual concepts, their massive reach because of just pure power of brand sitting in the coolers right there at every fast casual concept that uses Pepsi, reinforcing those stubborn soda products. Now you're relegated down to an online website, a mobile ordering app. The brand positioning is going to be very difficult, and it leaves an opening for these micro brands to really come in and play. Products is the next one. And if you look at where they're kind of going here, on 67% of their portfolio, volume will have less than 100 calories from added sugars per 12 ounce by 2025. Great move. I think this is going to be one that they're going to need to, again, accelerate. And then also 75% of foods portfolio will not exceed 1.3 grams of sodium. So that's obviously a kick on salt. And they're moving up the bandwidth, I think, pretty decent in 2019. But the 2025 target, I think, is a little bit of a stretch. Again, I think there's some acceleration. Now, I understand that this is a hard thing for Pepsi to do. But if there are companies that can pull it off, this is one of them. And if you continue to look further into their human rights movements, this is a great positioning for the company. I think they are well in the right aspect of what they need to be doing in terms of diversity and, supporting small business, minorities, things of that nature. There's a lot of movement that Pepsi is doing with this program. And Pepsi, if you are listening, we'd love to get you guys on a show talking about this one specifically, because I think this is an opportunity in the food service space that big companies like Pepsi can really make a difference in these small businesses if it's done in the right way. Now, let's talk a little bit about how the pieces of this puzzle fit together. So if you look at where Pepsi's position in terms of their partnership with a Beyond Meat and how that is going to play out and why it affects the fast casual category. Plant-based meat obviously got a big hit with Pepsi. The soda giant announced it was forming the Planet Partnership with Beyond Meat, one of the world's largest meat manufacturer, plant-based meat manufacturers, to develop produce and snacks and beverages made from plant-based protein. This is a great move. I think this is one of those moves that is, probably came out of the blue to a lot of beverage manufacturers, and the kind of alignment that this does. Now, there's a reason that Pepsi did this, and I'll talk to you about why that is and where it fits into fast casual. But if you look at that Allied Market Research number, fast casual restaurant market to reach 209 billion globally by 2027, and that's we're talking about a 10% rise in CAGR. This is a massive move from where fast casual was in 2000 when you look at what's happened in the industry and where it's going to be going and how it's going to be affecting. This is a huge opportunity, and it's a one that I think someone like a Pepsi could really take advantage of. Now, where could they go? So here's a stock chart that I use. I use Webull to do a lot of analysis on certain stocks. Big shout out to Webull. If you haven't had a chance to try those out, it's a great alternative to Robinhood. Won't go into that too much. But if you look at their stock and how it charts, this is a one-year trend line. Obviously, take away that massive dip when COVID hit, and just look at where they are positioned. You'll notice they had some interesting ups and downs in where their stock. What surprised me is that at the end of 2020, they hit their what was another all-time high for their annual, which was 140, I believe, $148 a share. And what surprised me is when the Beyond Meat bump of PR did not move the stock much. Now, this was an intriguing thing. So I think Pepsi and Beyond both. Now, Beyond, of course, had a great, I probably should have put that stock of Beyond's stock price because it just went from where I thought it was going, which was about 100, and it had bottomed out at about 113, and now it's skyrocketed over to 170 plus. But Beyond got a great bump. Pepsi, not so much. And this is an interesting thing that I'm looking at because how other analysts and traders are looking at Pepsi. Are they seeing into the scope and kind of the vision of what Pepsi is trying to do with Beyond? This next slide, I think, tells the tale. Now, this is an analysis that was done by Vox and one of their writers there, which was just absolutely amazing. I don't know that this was all of them. I haven't gone in and looked because there are a few brands that are missing. But if you look at Beyond Meat's penetration into the fast casual sector, this is impressive. Now, Beyond is still out there tracking in a big way to align with the fast casual sector, and I believe because of Beyond's position, they align very well with the fast casual sector. But if you just look at where they are versus their biggest competitor, Impossible, you can kind of see Impossible definitely needs to do a lot of work in being able to penetrate the fast casual sector. Now, if Beyond and PepsiCo can align in a way that starts to create additional products, whether it's snack, beverage, etc., they have a perfect line of distribution set up to what I think is the movement in terms of consumer trends, and that's the fast casual consumer. If you align plant-based food trends, align better for you food trends, and also people and planet mission trends, you put all those together and you look at the companies they're playing, and then you put a company like Beyond in there that has these relationships, and so does Pepsi. So now you've unified the penetration opportunity here into fast casual. This could get really interesting in terms of products and services that could differentiate fast casual concepts away from others. Meaning, if it used to be kind of the Coke-Pepsi battle, where certain brands, you would go to a restaurant because they had Coke, or you would go to a restaurant because they had Pepsi. Now I think you're going to start to see a whole array of products that are going to help influence a consumer decision, especially in takeout and delivery, and then also in the restaurant when we go back to in-restaurant dining. This is a massive shift in where this industry could be moving, and I think fast casual and the consumers of fast casual are literally sitting in the middle of the bullseye of where Pepsi Beyond are going. And I think this is going to be a very interesting partnership to watch. And I do believe that this right here could position Pepsi in a very interesting way for the food service sector, especially when it comes to fast casual. And that essentially, as you can see, that's where I think we're going to see this development of Pepsi and Beyond it when you look at fast casual as a massive growth vehicle with their $209 billion by 2027. That's going to be a big catalyst here for some things that are going to be happening, I think, in a very short time. So don't forget, before you guys leave today, make sure and register for the Fast Casual Global event. Just go to fastcasualglobal.com and you'll be able to get right to the event. But also, if you are not part of that movement on fast casual, you should be. not only for the virtual event, but also for our groups. We have a massive group on LinkedIn you should be joining. Now, we don't approve everyone. You do have to be a fast casual member or restaurant operator, but we do ask you to do that. And of course, you can also become a paid member to get access to research like what we kind of presented here today, but also to other aspects of brand analysis on a much deeper level. Make sure, and if you're listening to the podcast, give us a great rating or give us some feedback on what you think you would like to hear on Fast Casual Nation. And of course, if you have an idea for a show, just send it to producer@foodabletv.com or hit me up on Twitter @Paul Barron. We'll catch you next time right here on Fast Casual Nation.